Hi everyone. So with Apple announcing their fiscal Q3 earnings this afternoon, we thought we'd do a stock analysis on the company, the world's largest company in the world by market cap, which by the way stands currently at $2.4 trillion. It's one of the most recognizable brands across the globe. And when we dive into the details here, perhaps you'll be even more impressed with the balance sheet strength of this dominant business. So stick around. Let's do a stock analysis on Apple. Welcome to YCG, where we help your capital grow so you can achieve your financial goals. If that's something that interests you, then hit that subscribe button and the bell notification so that you don't miss a thing. I'm Will Kruger, CEO here at YCG. So this video on Apple should not be considered a recommendation to buy or sell the stock, but we hope as we evaluate this company that for educational purposes, you'll understand just a little bit better about how we think and understand the investment framework that we use here at YCG. In a crowded, competitive world where time is an ever scarcer resource, people desire filters that can help them quickly identify high-value collaborators. By creating belief networks that connect their brands to certain characteristics, luxury goods companies provide consumers with valuable filtering tools. From the beginning, Apple has sought after delivering premium luxury goods products within the smartphone, personal computing, tablet, and wearable categories. It's important to note that Apple designed and introduced a whole new category with regards to tablets, and that's of course with the iPad, whose quarterly revenue, by the way, alone is larger than the entire quarterly revenue of McDonald's at this point in time, just looking at Q2 2021 numbers. Not only does Apple have a strong luxury brand belief network, but it's a great example of a two-sided network effect where a new Apple device user plugs into a network of over 1.5 billion users across the world. The closed source system of Apple has created such a dominant brand where the power of social status, lucrative app design systems, software as a service all come into play in making Apple appear to have achieved a level where it may have enduring pricing power and a long runway for global growth. So with that, let's switch over to Refinitiv and look at Apple from the quantitative side of things. This is just a really basic analysis of Apple. Unfortunately, we don't have enough time to cover the kind of depth we go into before deciding whether it's a stock suitable for client portfolios. Okay, let's jump into Refinitiv then. Okay, so here you have ticker symbol AAPL. The stock closed today on July 27th at $146.77, down 1.5%. Market is closed, but Apple has just released its earnings, and as you can see, the bid-ask spread is moving upwards from where it closed. It's bouncing around a little bit, but let's go straight to the news because that's what everyone is focused on right now with Apple. So Apple just announced its Q3 earnings. Let's take a look here. So right at 3:15 p.m. Central Time, shares of Apple were down 0.6% in extended trading volume. There was talk about Fed and tech earnings. It certainly seems that tech earnings are very much under scrutiny. But let's take a look at what the Apple earnings were and let's look at the news here. So unbelievable quarter. The expectations for Apple was to earn EPS of 101, and it looks like they came in at $1.30, so that was a beat. Quarterly revenue was $81.4 billion. That's up 36% year over year. Again, that beat of 101. So revenue view was $73.3 billion. China revenue, this is, I think everyone's talking about this. China revenue at $14.76 billion versus $9.33 billion last year. So strong growth in China with regards to Apple products. Quarterly iPhone revenue was came in at $39.57 billion versus $26.42 billion last year. iPad revenue, $7.37 billion versus $6.58 billion last year. So very strong. Mac revenue also up from last year at $8.24 billion versus $7.08 billion last year. Services revenue, $17.49 billion versus $13.16 billion last year. So that talking about software as a service, very, very strong. Wearables, $8.78 billion versus 6.545 billion last year. So very strong. Tim Cook says has 700 million subscribers on its platforms, up from 660 million from the previous quarter. So again, growth in subscribership, which is great to see. Also, Tim Cook says that sales hit from global chip shortage was lower than the low end of Apple's previous estimates of 3 billion to 4 billion. He also says that the 12 Pro and iPhone Pro 12 Max were very strong sellers in the quarter. Subscription revenue rebounded in the fiscal third quarter as many retail stores were opened, and says supply constraints tempered growth in iPad and Mac sales. So shares rise. I think in the aftermarket, the shares of Apple rose 1.4% after the bell. And it looks like, let's take a look. Yep, so it's coming down. So it's kind of all over the map in the after hours. We'll have to see kind of where the market comes out tomorrow as it digests this new news here. Shows that shares have reversed course, fall 0.2%, and we already showed that. But all in all, a very, very strong quarter with regards to Apple. So let's go take a look at Refinitiv numbers. Looking at more long-term, you can see the stock price on a year-to-date basis. It's kind of been tracking just that 126.85 range. And more recently, since the June, we've seen some upward momentum here, trading at 146. Only about a 10% return, which is actually, I say only, but very, very strong from a year-to-date standpoint. All right, so let's go to fundamental view here on Refinitiv. You can see Cupertino in California is the headquarters. Employees now at about 147,000 employees, so obviously a massive company. Here we can see just how much cash that Apple has on its balance sheet. $19 billion in cash, $31 billion in short-term investments, total debt 121. Let's go down here. Enterprise value over revenue at about 7 times. The PE ratio in the past about 34 times, going forward looking at around 28 times. So not as expensive as the CAPE ratio for the S&P 500. Return on equity, very strong, 73%, going up to 120%, 132% in the next couple of years. We talk about gross margins. Let's take a look at gross margins as an indication of pricing power. And you can see this current last year, 38% growing into this year of expected 41.23%. And kind of tracking that 40%. So very strong gross margins as the business matures, which is an indication of pricing power. So you can see the EPS, it was expected at 101, and this afternoon's earnings announcement was a surprise. It was a surprise beat of 1.3. It would not surprise me if we see a reversal in the market stock price tomorrow, but we shall have to see. Here in the business segments, you can see revenue looking at 2020. Americas constitute about 45% of revenues. Europe was 25%, Greater China about 15%, Japan about 8%, the rest of Asia Pacific 7%. You can see that from that earnings announcement today, China, a very important market for Apple, and just explosive growth in that country. And so we'd anticipate this percentage of revenues growing when it relates to the Greater China area and the overall segments. Here you can see the difference versus its peers. So Apple kind of in a category all on its own, $2.5 trillion market cap. The size of other companies, HP at $34 billion, Cisco $233, you got Samsung at $458 billion. So just enormous relative to all of its peers listed here. If you want to learn more about our entire investment strategy framework, we have a video for that, and you can check out this link up here. As is often the case with such dominant, high return on capital businesses, Apple generates excess cash flow in droves. With a very strong balance sheet and consistent returns of capital to shareholders, our main concern with Apple historically has been the overwhelming reliance on smartphone revenues, and the stock market cemetery is littered with bankrupt cell phone makers. However, over time, Apple has transformed its business into multiple categories and creating new ones, while still being able to charge a premium for its products. Their closed system enables the company to now monetize and take advantage of high switching costs to another competitor, and creates opportunities to generate new revenue sources through software while leveraging the recurring hardware upgrade cycles. While a company may be growing faster than GDP now, what we really are trying to think through is, first, will this industry maintain or grow its share of GDP over time, or will it shrink as a percentage of our overall budgets over time? We've seen dramatic deflation over time, especially with computing hardware, and so for Apple, this is a big concern. And two, can this company maintain or grow its market share in the industry over time? If the industry is growing at least as fast as GDP and the company has pricing power, then it will essentially have built-in growth that's indexed to grow at GDP or better. It appears that Apple does have pricing power, so check on that point. For Apple, we see some growth coming from population growth, both growth in the number of people they sell to as they expand overseas, as well as actual population growth in each of those markets. There could also be some growth from market share taking, but we recognize the fierce competition Apple faces from other competitors, so they could also lose market share. But we definitely see continued growth in pricing, which is both a function of their pricing power as well as them simply keeping pace with inflation. On top of all of this, there could be some growth from margin expansion as they expand their more profitable software as a service channel and grow and scale larger. So as we look at Apple from our YCG framework, you can see that the competitive advantages for Apple is its global belief network and its two-sided network effects. Very strong network effect, of course, and yes, it's global, as we saw from that business segment in Refinitiv. And probably one of the key aspects here is that there is a high switching cost when it comes to moving from an Apple either to an Android or other phone network, just a high switching cost for consumers. And so it entrenches consumers within that closed Apple system. Obviously, the industry is the app economy and social signaling. Let's take a look at how Morningstar classifies Apple. So here we see Apple as probably has enduring pricing power. Morningstar moat rating is narrow, capital allocation at standard, and fair value uncertainty high. I would espouse that just to being in the tech sector and just having more volatility, things moving faster in the technology space. So fair value uncertainty still being high. The categories in large cap core. So we've already taken a look at some of these numbers, but here you can see Apple gross margins at 43%, estimated gross margins coming in around 41%. Here's what's staggering. Trailing 12 months operating margin, 27%. Approximate returns on capital employed, 29%. Approximate returns on invested capital coming in at 25%. Returns on assets, 17%. And returns on equity, 74%. Apple, of course, very strong balance sheet, net cash position, total enterprise value coming in about $1.9 trillion. Next full year revenue estimates about $356 billion, just staggering numbers here. Enterprise value, and again, enterprise value is if you were to take this company private and assume all its debt, you get kind of the enterprise value, and it shows this is a valuation metrics or a PE ratio, so to speak. But enterprise value over next full year's sales at 5.5 times. Price to next 12 months earnings coming in at 28 times. So again, when relative to the S&P CAPE ratio, which I think is trading at like 36 times, it's lower than that. Enterprise value over next full year's earnings before interest and taxes coming in at 24.8 times. Yes, this is an existing holding, and we own it for our client portfolios. This slide just shows you a few bullets on our company, YCG. So a great quarter earnings announcement from Apple today, and looking at the strength of its balance sheet as we looked under the hood with the Refinitiv numbers, you can see why Apple continues to be one of the most dominant businesses globally. With its strong network effect, with high switching costs, and the business laser focused on growing its market share, and in an industry that's growing faster than GDP, there's a lot to like about Apple. So what are your thoughts on Apple? We'd love to hear your opinions in the comments section below. As always, consult your financial advisor for what's right with regards to your own personal situation. We do own Apple in client portfolios, and you can request a complete list of all securities recommended by YCG in the last 12 months by reaching out to us. Thanks for joining us today. Check out one of our other videos, and we'll see you next time. Thanks for watching.